One of Canada's biggest banks is coming out and saying that the real estate crash is so similar to the 1990s and that prices aren't going to recover until 2029. And that's with an optimistic economic outlook. So let's get into this. So BMO has come out and said that Canadian real estate prices won't recover peak until 2029. So it's quite interesting because they go into the history of other crashes that have happened in Canada and other corrections that have happened in Canada. So Canadian real estate prices have been on a wild roller coaster over the past few years. Home prices surged 65% from 2020 to a record high in March 2022 after the Bank of Canada slashed rates to a historic low and piled on QE, quantitative easing, to stimulate record home sales. A year after hitting that high and rates began climbing, prices plunged 19% and remained 17% lower as of last month. So a huge decrease in prices, and that is definitely at the rate of how fast it happened. It's a crash, especially in the context of Canadian real estate declines. It's definitely a crash, but the question is, like, is this crash over? And to most people, they think no, and that's why we're in that denial phase. So indeed, even our base case view, which incorporates a stable economy, and that is so key there, their base case view incorporates a stable economy. The economy's far from stable. We've got tariffs that are coming from the United States, potential tariffs that Canada is going to impose as well. I mean, it's just a total wreck, the economy. And that's without acknowledging that Canada's in a depression already, like we are going to be covering tomorrow with the food bank usage. The insanity of the fact that many food banks are collapsing in Canada just shows you if your population can't afford to feed itself, you're in pretty troubled waters there. I think it's safe to say that you're definitely in a depression. Obviously, we know the way they look at this is they're not looking at GDP per capita so much, which shows up the depression, the fact that we've been stagnating here for so long in Canada, and the fact that GDP per capita hasn't really grown in the past 10 years. But when you look at GDP, it's moderately increasing. So they think, oh, okay, the economy is doing okay. But then when you think about how much of that is government, like it's nearly 50% of the economy is government spending. And then how much of that is real estate related? So what actual goods producing sectors do you have left? What commodity producing sectors do you have left? Unfortunately, the decisions of politicians over the past 2 decades have led to the economic collapse that we're in because they've decided to center the economy around real estate and government. And it's no different with the incoming Conservatives. In fact, their plan is to center it less around government, more around real estate, which I don't agree with either. So it's just a total disaster. And really, you have to look at real residential property prices for Canada. And you can see right below where my picture is right now, you can see there that they are continuing to fall. And guys, just remember, this is adjusted for a fake inflation number that we all know is fake. And you haven't even adjusted that to the insane decline that has happened in the currency as well. So you're holding a asset in Canadian dollars, you're losing on the currency and you're losing on inflation. That's even if prices were going up at a moderate rate of 2 or 3% per year, people would still be losing. But the average person does not realize that. They think buying a house in 2016 in Calgary, then selling it in 2024 for the same price, they think they got out okay. It's so stupid when you really think about it. And it's so obvious at the same time too. So obviously with BMO just saying that that's with a stable economy, just think about what it's going to be when the economy isn't stable, like it is right now. It's just crazy. The 7-year return to peak may sound like a long time, but it isn't in real estate terms. According to the bank's math, the 1995 Vancouver real estate crash took nearly 9 years to recover. Then there was Ontario's early 90s crash that took 15 years to recover, though inflation-adjusted Toronto didn't recover for a whopping 22 years. And that is what you want to be looking at here. You don't care about nominal price returns because guess what? If you withdraw that money for your house, I mean, think about it. Most Canadians, they don't even want to retire in Canada. They can't afford to retire in Canada. So they're going to be going to Mexico or somewhere else. And they're going to need dollars probably, or at least a derivative of dollars. And obviously, if inflation has destroyed your currency or just an outright decline has destroyed your currency, it does not matter if your home has gone up in nominal terms. It's really, has it gone up in real terms, especially if you plan to exchange it for goods and services. So that's the main thing. And I really don't think inflation adjust prices are going to rise for a long time in Canada. And that's been my base case for a long time as well. I think, yeah, prices will start to rise at some point, but people won't even realize they're also not looking at interest rates. My base case for longer term is higher inflation is going to be the theme, and we're going to have major swings in that, like we're seeing disinflation right now, and that will continue. But I think long term, higher inflation is definitely what you're going to see, and especially if there's more trade wars, embargoes, those type of things happen, then it will start to look a lot like the 1970s, which will not be pretty with the debt levels in Canada. So the bank expects a prolonged recovery time due to the peak of the bullish forces that drove Canada's long-term boom. Those forces include millennials hitting their demographic cresting, with the youngest ones already 34. Their family forming years and need more space is coming to an end. I mean, that is just unbelievable. I can't even believe that they've said that. I mean, it's nothing to do with that. It's all to do with speculation and investors. I can't believe it. That is just another narrative that has been put out there. Every single year, you've got people coming of home buying age. Why do people suddenly think that, you know, when the next generation starts, that things are suddenly going to flip and change? Like, it's exactly the same every single year. But I will say that this article is right to draw the parallels between the 1990s and what's going on right now. But that part about millennials coming of age, it's not true at all. So housing valuations entered the 1990s at similar stretched valuations. Investors and lack of supply drove the narrative. The peak of the baby boom turned 34 years old in 1993, just like their kids today, and robust international immigration flows were cut in half from 1989 to the mid-1990s. That's a rhyme, all right, he won. And I will say that the baby boom, obviously, that was definitely a boom in the population, and you can definitely say, yeah, that would have an effect on real estate, especially if you're not building all those houses. But when you're going from like one generation to another and nothing's really changed, it's not like you're seeing those huge swings like with the baby boom. It's not really affecting it in the same way when it's year after year the same thing. And that's what I mean earlier with this article. And I can see now why they've decided to actually go back and say about the millennials. But anyways, when you think of that, you've just got to think it sounds very much the same thing to what we're seeing today, especially with immigration flows that are likely to be reduced. In fact, they're already being reduced. And it's not only that, immigrants aren't stupid. The word starts to spread that the economy is bad. Students start coming back saying, hey, I've had to go to a food bank. Don't send your kids to Canada because it's just horrible. You can't find housing. You can't afford food. So word starts to spread, and then the people stop coming, essentially. And there's no jobs anyway for these people. So there's really no point in just increasing the immigration. It's just a really dumb policy that happened over the past couple of years, just a careless careless and reckless one. And you're likely to see more and more people leaving, and they'll leave because the economy, that's what happens when economies perform pretty badly. Canada's already got a massive brain drain with the United States because right now, at least, the economy in the United States is doing much better than the economy in Canada. So I just want to touch on shadow stats just quickly. Obviously, inflation, real inflation, according to shadow stats numbers, which look at a more accurate model from the 1980s, they're pinning inflation right now at between 10 and 15%. And that's probably correct. That's probably where it is in Canada as well. And you're also starting to see this happen, which you should take note of, because as I said, the main component of what caused this housing bubble is excessive lending, a debt crisis, and a credit bubble. But who was the main person that was being lent that money and was driving prices higher? It was the speculators, the same people who rent out their houses and are being obliterated right now. Another great tweet from Chazzy on X. You should definitely follow him there. Toronto landlords are now offering incentives like free rent and other perks to attract tenants. This map shows 1,852 apartments with move-in specials currently available in Toronto. This is exactly the same sort of thing that we're seeing in Calgary. And guess what? In Calgary as well, that boom town where a lot of people were pinning that it's going to be the next Toronto, and maybe it is, maybe it isn't, but it looks a lot like a housing bubble that has driven up prices over the past couple of years. And Alberta is definitely not immune to recessions. In fact, they feel it worse than other places. And you're starting to see rents that are declining at quite a rapid rate there. They're down significantly, and they're down year over year over 6%. And that's without inflation, guys, again. So you're talking about a nominal price decline. With inflation, the decline actually looks a lot worse. And the same thing is happening in the biggest bubble, which is Toronto as well. So you can't ignore these things. That housing bubble is definitely in dire straits here. So if you've enjoyed this video, I'd highly recommend that you check out this video here. And if you're looking for a VPN and want to help support the channel, then go to expressvpn.com/marketmania. And I will see you in the next one. Take care.